Welcome to MoneyWise Smart's Multi-Bagger Research Series Earnings Updates, where we provide updates on the recent earnings of the great potential multi-bagger businesses we cover. Insperity is one of the best PEO, professional employer organization, firm in the US, providing human resources and business performance solutions, with a large addressable market and strong tailwind. On 11 February 2021, Insperity released its full-year results for year 2020. Before we discuss the earnings, please smash the like button below and subscribe to our YouTube channel. That will help us a lot with the YouTube algorithm and keep us motivated to bring more of such high-quality content to you. Insperity released its earnings for 2020 Q4 in February 2021. The performance they held up during this challenging year of 2020 is a proof of the advantage of their business model in client selection and risk management strategy. The year 2020 also highlighted the way Insperity timely responded to unprecedented challenges from the pandemic and demonstrated the importance of their HR service to their clients, reinforcing their tagline, "HR that makes a difference." In the beginning of 2021, Insperity worked out a new 5-year plan, which reminded the founder and CEO, Paul Savardi, of year 2014, when the company refined its sales and mid-market models, which subsequently resulted in very strong financial growth and a 5-fold increase in the company's share price, or in Paul's own words, the company's valuation, from 2015 to 2019. Here are our 15 key points from the earnings results and earnings call for 2020 Q4. Total revenue for 2020 Q4 was $1.06 billion, a 1.7% decrease from the $1.08 billion in 2019 Q4, but a 4.8% increase from $1.01 billion in 2020 Q3. This increase compared to previous quarter was driven by worksite employees, in short, WSEs, paid from new sales, client retention and net gains in their client base exceeding their 2020 Q4 forecast. Total revenue for the full year 2020 was $4.29 billion, a 0.6% decrease from the $4.31 billion for the year 2019. Average pricing increased 3% year-over-year for the full year 2020, indicating Insperity's pricing power to pass on cost increase to its clients, more than offsetting the decline in average WSE. Again, some recognition of revenue was delayed due to the deferral of payroll taxes due to the FICA deferral program instituted as part of the Coronavirus Aid, Relief, and Economic Security Act, in short, the CARES Act. However, this deferral has no impact at the gross profit line. The average number of WSEs paid per month in 2020 Q4 was 239,000. A 3% increase from 228,000 in 2020 Q3. This number was above the high end of their expected range, but still 1.8% lower than 244,000 in 2019 Q4. In 2020, the client retention rate decreased from 85% in 2019 to 82% in 2020. The recovery in the level of paid WSEs since the low point in May 2020 during the pandemic was driven by the return to work of many of these employees and Insperity's effective selling and client retention. All of these drivers exceeded their expectations. The outperformance in the level of paid WSEs compared to their initial expectations of the pandemics highlighted the advantage of Insperity's business model in client selection and risk management. Gross profit for 2020 Q4 increased 3% from 2019 Q4 to $168 million. Gross profit for the full year 2020 increased 10% from $733 million in 2019 to $807 million. Despite decreasing paid WSEs, their gross profit increased due to improved pricing and higher than expected contributions from their benefits and workers' compensation programs. Lower healthcare utilization during the pandemic outweighed any incremental COVID-19 related testing and treatment costs and drove the lower cost trend. However, previously deferred care costs did not materialize at the forecasted level. Their workers' compensation program continued to perform well due to, first, ongoing management of safety practices and claims, and second, to a lesser degree, a favorable net impact from the reduction of workers' compensation claims associated with the work-from-home status of many of our clients' employees. Operating expenses for 2020 Q4 increased 19.1% year-over-year to $160 million. Operating expenses for the full year 2020 increased 12.1% from 2019 to $612 million. This increase was from continued investments in their growth, products, technology, and increase in stock-based compensation driven by their outperformance in the level of earnings throughout 2020. The operating expenses in this quarter also included costs associated with a 9% increase in the average number of trained business performance advisors, BPA, and the opening of 6 new sales offices throughout 2020. However, the increase in their investments was partially offset by cost savings in other areas of their business through effective management and pandemic-related cancellations or shutdowns. Excluding stock-based compensation and depreciation and amortization, the operating expenses for the full year 2020 increased by 9% from 2019, and the operating expenses for 2020 Q4 increased by 5% from 2019 Q4. Adjusted earnings before interest, tax, depreciation and amortization, EBITDA, for 2020 Q4 was $38 million, a 7% decrease from $41 million in 2019 Q4, and a 34% decrease from $58 million in 2020 Q3. Adjusted EBITDA for the full year 2020 was $289 million, a 15% increase from $226 million in 2019. The increased adjusted EBITDA for the full year 2020 from 2019 reflected that the financial impact of shutdown-related layoffs in their client base was more than offset by lower direct costs due to behavioral changes in healthcare utilization in response to the pandemic. It also reflected a continued management of their operating costs. A substantial decrease of adjusted EBITDA in 2020 Q4 compared to 2020 Q3 was partly due to the Insperity's earnings pattern that earnings are generally higher in the first half of the year, as they typically earn a higher level of payroll tax surplus prior to WSEs reaching their taxable wage limits. Additionally, the medical claims costs tend to increase throughout the year, as the WSEs medical plan deductibles are increasingly fully met, with Q4 being the period with the highest costs, which had a negative impact on their Q4 earnings. As a reminder, Insperity's adjusted EBITDA is EBITDA plus non-cash stock-based compensation. Net income for the full year 2020 was $138 million, an 8.5% decrease from $151 million in 2019. Net income for 2020 Q4 was $4.3 million, a 79%, or a $16.1 million decrease from $20.4 million in 2019 Q4, mainly due to the increase in stock-based compensation expenses of $18.9 million. For the remaining points of this video, please check them out at our multi-bagger research series at the link in the description below. In that series, we discuss in detail great businesses to own and compound our wealth for the long term. These great businesses have been growing fast in terms of revenue, profits and free cash flows. For example, this global payments company has grown at a compounded annual growth rate, or CAGR, of 60 to 80% from 2014 to 2019. Meanwhile, this technology company has grown its revenue at a CAGR of 80% from 2016 to 2019. And this payments company has grown its revenue and profits at a CAGR of 20+% in the past decade. If you have enjoyed this video, please smash the like button below and subscribe to our YouTube channel. This will help us with the YouTube algorithm and keep us motivated to bring more of such high-quality content to you. Do join us in our investment forum on Facebook using the link in the description below, where we discuss lots of interesting businesses and investing concepts.